Hey everybody, this is John and welcome to the free video. So let's dive in here. I got a couple of, I think, interesting things to show you. So we're going to take a look at the spiders. So the S&Ps for from this morning into the end of next week have an expected move of $4.50. So already did like almost half of that expected move in one day. So typically when that happens, especially on a Monday, I start looking for a consolidation the rest of the week. So we did set up some flies on that. And then the question just kind of becomes, well, in terms of targets, how much room does the stock have to kind of go from here, right? If it does break out, which we'll also take a look at. And then keeping in mind here that the strongest sector continues to be oil. And we were looking with that monthly squeeze that we'd actually, gosh, way back when, a couple months ago, when this triggered, we were looking for a move up to the tree line, actually by the end of the squeeze. So we were thinking, from here, like it would get up there in 6 or 7 months, and it happened, pretty quickly. We actually still have another potentially 4 to 6 months of squeeze here. So it would make sense that we take a little bit of a break here, but make no mistake, capital is flooding into the energy market. Okay, and so we're looking for this to kind of continue going higher. And so somebody was asking today, it's like, okay, well, on something like this, because oil is so strong, does that mean that we buy the S&Ps here? Can that drag the S&Ps higher? And the problem with that is that there are other sectors out there that are not doing well at all. Okay, so XLP, and the list goes on and on. And so in this kind of a situation like this, I would not buy the spiders just because energy is going higher. I would just buy energy. And so the safest way to do that, you could just buy XLE if you don't trade futures. Just buy that. Keeping in mind that on a monthly chart, even though on a daily chart this thing looks like it's pretty stretched, on a monthly chart, okay, it looks pretty fantastic. So it just kind of begs the question, like, all right, well, how do we know when something is, like, if we bought right here, is it topping out, or how do we know that? All right, so in terms of targets, they do move dynamically. And so for the spiders right now on a daily chart, you can see that essentially it's kind of like the profit zone. We're slamming into it right now. All right, when this happens, it is very, very rare that you're going to poke up above it. All right, so you can see profit zone, profit zone, profit zone. And even with the squeeze here, when you get that, it kind of limits it, right? But when you come over to the NASDAQ, you can see here that, all right, yeah, we hit a profit zone there, square right between the eyes. But, there's actually plenty of room up here still for this next go round. And so these things, they actually change dynamically based on a couple of key historical relationships that whatever stock it is that you're looking at has with the main moving averages that it interacts with. And then once these kind of like these floating targets on the upside and the downside, once they are there, it helps you know when to get out of a trade. So as an example, I'll show you two quick examples. All right, so here are two stocks, daily charts, two examples, and they're both squeezes, right? Now, this one completely peters out. Now, usually when there's a squeeze, I'm looking for the 1272 extension. This one completely peters out well before the 1272 extension and then rolls over and dies. So if you're sitting there with an order to get out there, you just get hosed. But on the other hand, on Alibaba, you get the same signal in this case. Yeah, it goes right into those zones. That's great. And I've traded NVIDIA before where you get a squeeze and, yeah, it slams into those zones. So the question is, do you know in advance the probability, like when there's a signal like this, is it going to get into that 1272, 1618 zone, or is it going to completely peter out before it even gets there? So the answer is yes, and I'll see if this is not scrunched up too bad. So here you can see that these I call them dynamic profit targets. Here you can see where they're floating around. Essentially, here's the squeeze, and it's well below the 1272 and the 1618. And in this case, we get up there, we get a little bit of a profit, and then we peter out. Again, had you known in advance that that was the case, you could have planned accordingly. But then when we look at Alibaba, same setup, and in this case, you can see that these profit zones are like right up into, well into the 1272 and 1618 extension. So in this case, yes, it made sense to hold on for a bigger move, whereas for NVIDIA, it actually made sense to plan to get out early, or knowing it wasn't going to have as much power to do something different like a put credit spread, or just get out for like $1 instead of trying to double your money. All right, so what is this whole concept? What is it about? So I'm going to do a free webinar on this. So if you go to simplertrading.com/targets, this free webinar will be on Thursday, May 24th at 7 o'clock Central. And essentially, I'm just going to lay out the whole process for you. And you can take a look at it and say, John, that's awesome. Thanks for sharing. Or, oh my gosh, it's not awesome. I think you'll like it. But either way, cover some new ground, some new stuff. And, we're entering a very, very critical part of the markets here. We had all that volatility in February. Things are trying to settle down. And now the question is what happens next? And, I'm not going to read all these bullet points for you, but essentially it's a way to kind of manage all of that. And the most important thing from a trading perspective is know that when you get into a trade, where is your highest probability of getting out? Okay, do you hold on for a bigger move, or do you get out like at the lowest low-hanging fruit target that you can see? Okay, no matter what the market is doing, and to the upside or the downside. And it's a fascinating thing. It took us a long time to figure this out, and I'm excited to share it with you. So I am looking forward to seeing you guys on Thursday. You'll probably see a link in the email. You can also just go to simplertrading.com/targets, put your name and email. Again, free webinar, and see you then. Have a good night.